Hi, everyone. It's Erin Beck with Spechler and Beck Real Estate Group. I want to first start by introducing our team. I know you know Karen and I pretty well, maybe Karen or I better than the other, but we also want to introduce you to Lindsay Summer, who has been our wonderful marketing director for the last couple of years, and she is actually licensed and starting to sell real estate as well. So some of you have met her, and if not, we're excited for you to get to meet her. She is amazing. So quickly, we just wanted to go over all of the talk about the shifting market. I know that's a big thing people are wondering about, especially this week as the Fed has made some announcements and some moves. And so we just want to talk to you about what the shifting market actually looks like in Santa Barbara and which way we think it's heading. So let's start with, we're going to talk about the recession and what some economists are saying, and then we'll look at Santa Barbara. So a recession doesn't necessarily mean that prices are going to be falling. We're hearing a lot of people say prices are coming down, the market's crashing. I'm just waiting because they're thinking what happened in 2008, which was a pretty scary time for all of us. So let's look at history, the economic recessions from 1980, and see what actually happens to the real estate market in a recession. So did you know that out of the last 6 recessions that we've had, 4 of them, prices actually went up? A lot of people are shifting their money around and they want to invest in real estate. So we all remember this time, 2008, that was a very different real estate market and different economic climate than we're in right now. But look at these other recessions that we've been through, home prices actually went up. So just because you hear recession does not necessarily mean that values are coming down and that the sky is falling when it comes to real estate. So what are economists saying? Well, they've been projecting that home values are going to be continuing to go up a little bit less than we experienced in the last couple of years, but still 3 to 9%. And we can look too at what the slowing down appreciation means. Appreciation is slowing, but we're not expecting depreciation. That's what the economists are saying. I heard a really great analogy of this. For the last couple of years, we were going like 90 miles an hour down a freeway, and it was a crazy wild ride. And now we've slowed down to 65, 70 miles an hour. And that's still fast. It's a normal pace. It just feels like we've massively hit the brakes because we're going so much slower. But appreciation is still there, and we're still seeing it in your homes. The lending standards compared to 2008 are much, much higher. Back then, if you had a pulse, you could get a loan. It's not the same way anymore. And that's actually measured by the mortgage credibility or credit availability index. And as you can see back then, anybody was getting a loan. Since then, they've really tightened their guidelines on who can receive a mortgage. And so because of that, we're definitely likely to see less foreclosures because there's much more qualified buyers, much more qualified homeowners. And I think only about 0.4% of homeowners now are facing foreclosure, which is a really, really low number. Inventory is still historically low. As you know, supply and demand, basic economics 101, and inventory is low, especially here in Santa Barbara. Our numbers are down in terms of available homes for people to buy. And in Santa Barbara, the demand is still really high. Our supply is low. So let's take a look closer at Santa Barbara houses and condos. For houses, our active listings are down 24%. That's the inventory I just talked about. And our median sales prices are still up 17%. So we might see this number start to level off a little bit as appreciation slows, but we're not expecting to see it come dropping down. We're still year over year up 17%. And for condos, our listings are down 25% and our median sales price is up 18%. So actually very similar for houses and condos, which isn't always the case. So a few final thoughts. Even if prices drop by 10%, we're still going to be up over last year. Equity isn't racing up, but again, it's going to maybe level off, but we don't necessarily see it dropping because there's still so much demand for our sweet Santa Barbara. There's less of a frenzy. We're no longer seeing 15 offers on a house. There's still often multiple. We were in 2 bidding wars this week. So there's still lots of buyers out there. But it is harder to sell the hard to sell properties. So if you've got a home on a really busy street, maybe a home that needs a ton of work for the big systems in the house, homes up in high fire areas, those were flying off the market in the last couple of years because buyers just didn't seem to care. And now they're slowing down. They're being a little bit more thoughtful. And so it's a little bit tougher to sell some of those properties. And finally, the cost of construction is still really high. And with the increased mortgage rates, buyers are finding less cash in pocket. So a lot of buyers are looking for homes that are already remodeled or at least ready to move in. Those fixers with a view that used to be all the thing 10 years ago are less desirable now. So please follow us on YouTube, Facebook, Instagram. We're on social media. Our Lindsay does an amazing job of showing everything we're doing, and we would love to stay in touch with you there. Thanks so much, and we hope you guys have a wonderful week. Bye.